Hey everybody, welcome to the free video. Let's talk a little bit about some of the big stocks that are coming up and have earnings in a couple of weeks. So Amazon here obviously being one of them. This is one where I actually am not a huge fan of what I would call the pre-earnings moves on this, because they tend to be a little wily, and I'll talk about why here in a second. But this is one that's fun to play after market. So this one I'm looking for it to kind of settle, probably pin at 1,000 because of options expiration. Okay, so if you're in our trading room, you'll know that we are doing a pin on Starbucks at $55, okay, for options expiration. And this is just a very, very specific strategy around a specific situation, and Starbucks meets that criteria. So, you know, we sold a straddle on this at 55 that expires in 2 days, as well as an iron fly, which is a lower risk way to do that. And the reason being, if you go down here and you look at this, it's like, wow, you know, it's not like there's an extraordinary amount of open interest here and here, so it kind of matches. So think of this as a huge straddle that a hedge fund sold, and guess what? They want it to expire near worthless, and guess what? They're going to spend the money to make sure the stock is pretty close to that level. Obviously, this is not a 100% guarantee, but the probability is high enough that I like to do that month after month after month. Now, on the other hand, Facebook is a stock that I like to play prior to earnings, and so we're just starting to look at positions on this one now for a very specific behavior pattern on Facebook leading up to earnings and after earnings, and I'll talk about that here in just a second. And keep in mind too, because Netflix just came out too, and this is a pattern that I remember that happened a lot in Q2, where you get a nice run up into earnings, and then they'd have great earnings, but it was kind of like a, you know, buy the rumor, sell the news kind of a situation. And I'm expecting to see that with stocks that are trading near new highs. The reversals are happening more in the surprise stocks, like they just like, oh my gosh, I didn't know that IBM was going to be able to pull that out. All right, so we want to just kind of keep that in mind as we look at that. Okay, and then for tomorrow, a couple of the biotechs had some interesting stuff after hours. Gilead here up $2.36, almost 3% after hours, and that's got the IBB trading nicely after hours as well. Closed at 335, trading up about $2 after hours. So look for some action in the biotechs tomorrow. And then last but not least, I've got a lot of questions on GLD. It's like, gosh, you know, is gold here? Is this a buy? You know, what should we do? And really, I'm just taking my cue from the dollar index here. It's been mirroring the dollar exactly, and the dollar right here is just not showing signs of strength. So I'm not a buyer of gold yet, but I'm certainly keeping an eye on it. All right, so let's dive in here and kind of look at the, you know, earnings here for Facebook and Google and exactly how to play those. All right, let's talk a little bit about earnings plays, because we are smack dab in the middle of the next earnings season. So one key with earnings trades is to be able to identify which of the stocks will only move an average of 0.47% versus having a huge move of potentially over 15% in one day. Okay, part of the challenge and fun is identifying the stocks that have a better than average chance of making a big move, but at the same time understanding the normal stats. You know, when is a stock expected to stay in its range versus has an edge and a possibility of breaking out. So it's important to have the right tools here. So this is one of the tools that I like to use. This is an expanded version of our earnings stats indicator. And it just tells you everything that you need to know about the personality of a stock. Now, that's one of the things about stocks, is that with earnings, each stock has its own personality. It's like if you're a teacher and you've got 30 kids in a classroom. Yes, they're all 10 years old, but they ain't all the same, right? Each one's a little bit different. One's going to be quieter, one's louder, one you want to slap upside the head, and the other one you want to adopt. And it's the same way with individual stocks. And so Facebook has a specific pattern that it does. Okay, and because of that, right now, and these are positions that we picked up today, I'm buying at the money and out of the money calls where I think we're 13 or 14 days out from earnings. Now I'm planning to hold those into earnings, but I am not, okay, and I repeat, I am not going to hold those through earnings. All right, and the reason for this is I know that by looking at the past is like, okay, the 70 delta calls are fine and the 50s are not bad, But when you buy the 40 delta calls and the 20 delta calls and even the 10 delta calls, you know, the only time in the world that it's okay to buy 10 delta calls is 14 days prior to Facebook's earnings and sell them the day before. The specific scan covers that, and it's one of those things that's great, it's low risk, and it's a beautiful thing. On the other hand, Google is completely different. Okay, this is the kid that sits in the back row and he's not paying attention like Facebook, and it has a different footprint. Okay, now while it will have a similar run up into earnings, its behavior after is completely different. And while Facebook's biggest quarter tends to be Q2. Okay, let me go back here to Facebook real quick, so you can see. Q2 average 6-day move is like 8%, okay, versus if you go and you look at Google, the average Q2 post move is only 1.8%. Their bigger move is typically Q3 after earnings. Okay, so again, each stock has its own personality and seasonality, and so you need a tool like this that can lay it out for you. And based on this too, what I've found is that on something like Facebook, I can say, all right, what about after earnings? Okay, typically after earnings, because remember, most stocks are going to stay in their range. Well, after earnings, guess what? You can sell iron condors and straddles and strangles on Facebook after earnings and get some decent income. Nothing to write home about, but again, a part of the process in trading is consistent income. On Google, though, if you tried that same strategy, you would just get whacked. I mean, it would be just like, okay, it's just not a way to make money. Instead, though, however, if you reverse that and go long straddles on Google, specifically those 12 out of the money ones, you get a much, much better return after earnings. Okay? So it's all fun stuff. So if you're new to earnings or you're a veteran and you've been doing this for a while, we're going to be doing a class this Saturday. So it'll be myself, Henry, and then we're going to also be spending some time talking about that backtesting tool as well. So the strategy here that I'm going to be talking about is specific personalities we've found for different stocks and the strategies we employ for each pre, day of, and post earnings. Okay, some specific things for day of earnings, and then my favorite is, so pre-earnings is kind of like, that's the steadiest, most consistent. Day of is always interesting. I tend to do smaller positions on this because of the unknown factor, but the nice thing about it is that I'm also going to show you how to work your way out of positions that aren't working. So typically if one really just goes against you, you can still kind of scratch it out. And then post earnings, that's kind of where I call the bigger money is, because since they're safer, I'm willing to take much bigger positions on those. Okay, and so we're going to talk about strategy there. Now, if you're interested in the CML tool, you can. If you sign up for this, then you'll get a link for that, so you can sign up for that at a discount if you're interested. You don't need the CML tool; that's the backtesting tool I was showing you guys. But it's an opportunity there if you're interested in. Now, I think where the rubber meets the road on this is going to be the live trading. So the live trading, we're going to do 5 earnings sessions. Okay, it'll be a couple hours at the end of the day, and we'll set them up, and then you'll have text alerts if you can't be there, and we get text alerts on what we're doing with them the next morning. But we're going to actually set these up with you. Okay, and this live trading class actually also includes that earnings analysis tool that I was showing you on the chart, where it shows kind of the personality of Facebook and the personality of Google. And again, if it's one of those things, if you're not sure, just do this one. Do the 497 one, because if you'd like, you could upgrade later to this one, but at least it gets you the flavor of it. And then this you don't need to worry about right now. That's just something that, if you're like, you know what, I love this, and I also want to be a member for 6 months, you could do that. But I would just say that this is something where in these earnings classes, we typically make plenty of money in the earnings class to pay for the class. So it's an immediate, fun return, ROI return on investment. That's great. Okay, so that's what we got going on. If you go to simplertrading.com/quarters, you'll see all this information. And again, the class is this Saturday. If for some reason you can't be there, it will be recorded, and I think this will be a priceless knowledge for your trading repertoire that you can use to continue extracting money out of the markets. And it's a great time to do it as we're just starting the thick of earnings season. Okay, you guys have a good one, and we'll see you at the next update.